You have to stay within good odds. Let me go over this again. This is something I've also gone over. I've explained it to you guys in the past like this. Let's say this is 100. Okay? And let's say this is 0. Let's say this is 50. Let's say this is 75. And let's say this is 25. Now, stock drops from 100. This is not prices. This is just breaking up your down move into percentage rebounds. So stock drops. The bottom gets put in right there. That's your 0. We don't know where 0 is going to be. It's just when the bottom gets put in, that's your 0. Now, from 0, what are the odds that the stock bounces all the way to 100 and beyond? That's 1 and 10. So what this means is that, right, if you're asking your stock to go to a new high after a drop like this, all right, you're going to be disappointed 9 times out of every 10. Now, something interesting happens at 75. You actually get close to 3 out of 10. It's not quite, actually, but let's just round. Whoa, just by dropping a little bit, you triple your results. You're still not profitable with this strategy. But it's better than the first one. Now, when you go halfway, when you only demand that your stock bounce halfway back up, all right, that happens 6 times. Now, with some loss management, you're profitable. But oh my God, what do you think happens here? We go to 9 times. So you don't need to be this ridiculous with 25%. 6%, between 6 and 9% is the sweet spot. So if you do something like this, you can make a fortune. Because you're going to get like 8 times out of 10. And you can make a fortune. Look at JD. It's right. This is the chart. Look at it. Let's take this drop. Remember, you can ignore the long tails. Where's the bounce? Halfway. All right, now let's take this drop. Where's the bounce? Just a little bit shy of halfway in that sweet spot. All right? You see what I'm saying? You take this bounce, this drop. Where's the bounce? Halfway. You see that? If you live in that halfway or slightly under, your odds go through the roof. It's when you start to ask your stock to do what it statistically does a small percentage of the time where the trouble comes in. Where do you think, guys? I have anywhere between 6 and 8 losing trades on average a year. Sometimes it's more, sometimes it's actually less. Where do you think I'm living to get that kind of results? Where am I living? Here. You see that? Boom. Oliver, why are you not holding on? I see a lot of your stocks go on to be bigger winners. Yeah, that's true. And that's valid. But I'm preferring these days to live in the 8 to 9 out of 10 world. I can sacrifice this. Now, what do I do to make my gains equal to that? Pick up my size. You see, the further you're demanding your stock to go, the smaller your size has to be. The smaller you're demanding your stock to go, the bigger the size it can be. Does that make sense? If you're asking your stock to go $1, you got to risk less. If you're asking your stock to go 30 cents, you can risk more because that will happen far more frequently than $1, right? And so by picking up my size and living here, I can make the same, if not more, than going for that because I'd have to drop my size. Now, this is more of a scalper's approach. A scalper is going after a percentage move and out. That's not necessarily how you first develop as a trader. I did not develop as a trader like that. All right? So, for instance, if I tell you that I want you to focus on getting in here, and I want you to focus on riding this out to a new high, whale complete, taking profits, leaving something in, and riding the rest. Okay? This will teach you how to gain things like this. Like, look at this. So let's say you played this the other way, right? Let's say you shorted here because you got wideness, right? So let's say you shorted there. You dropped, you took some profits, it pulled back, you went back in here, boom, on this fat red bar. You got your new low, you take profits, that's your whale complete. Now you leave something in, and now some traders say, I'm going to pivot out. Boom, 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 boom. Look at what you get. By teaching you how to do this first, and you get good at this, then when I say go after 30% bounces, won't you tell me, Oliver, I've been grabbing 80 cent, dollar, $2.50, multiple whale plays. Now you just want me to take 30 cents, 35 cents? Wouldn't you be able to do that all day long if you got good at taking dollars, 80 cents, $1.20? You understand? So if I start with you scalping, you will have a much longer journey to profitability. Oh, yes. The shortest way to consistency is to teach you how to ride out winning plays. Then what comes with that automatically is the skill to scalp in a scalper's market. What automatically comes with the ability to ride out plays is the ability to take a small profit because the market's now not following through. It comes with it as an extra perk. But if you start off scalping, what doesn't come along with scalping is learning how to play bigger moves.